Okay. So I'm going to start with the monthly. If we look at the current monthly situation, we have just rejected at a monthly resistance area. Now, there's a long way to go, right? If you look at the monthly has the scope of going up to 2000. Is that going to happen? I don't know. We'll see. So let us mark that. And let us mark this here. So I believe this is a good area. This is the first area we're going to look at. So looking at the monthly, historically, we have USD keep dropping as well. Yeah, we'll look at that. So monthly, let's look at the current situation. What's the story that market is telling us? If we look at the existing story, we rejected at the trend line right there. Pinpoint rejection. And going back down. Let's make the color of this different. Okay, perfect. So we rejected that trend line on our way down. Now, where can we expect price to go bullish? Our expectation is going to be in this range here, because we can see that price has dropped down and eventually gone bullish between this range here. We have a good amount of support on the monthly coming up at 1832, which is in line with the monthly lows. So we just are gonna try and see if we reach all that far down. Right now, if we see what's happening here so far, this is what the story has been. So since we broke through this monthly trend line, we haven't gone back to do a retest. Now, would we go back all the way to 2000s? Likely, why not? Right? We can definitely go up to 2000s to do the retest, but do we need to always do the retest when we break through a trend line? So look at this here. We got a retest, tried to break above, rejected, continued further down. So I am expecting a push up once again, but right now it just seems a little bit far-fetched. We could still drive up to 2000, this area right here, and it coincides perfectly with the current monthly, giving us the top wick. So we could potentially go up to the 2000s. Right now, this week, that looks extremely difficult, right? Hi Pexi, hi Lakshmikant, great to have you guys here. So let's take this out right there, and let's keep this for now. Okay, now monthly, where have we taken support? If you look at the left hand side, the current bodies are right above this top wick here. Bottom wicks right around those bodies, with right there. Right, so let's mark that monthly support. Current monthly has not necessarily given us a big range, right? Monthly has barely moved. Today we're gonna see close to a 200 pip move on news, right? That's the level of news that we're looking at. So let us mark this up here, and so this area right here, right? The power of this doji here is what we're seeing over on this side here. We created support right above that area, right? We've gone bullish there once, twice, thrice, and now the same expectation carries forward, is we would go bullish there once again. Okay, so had price formed support right in this range here, we could have expected price to go all the way up, right? And then do the retest and drop down. Now that hasn't happened yet, so we'll see what the market presents, right? Yeah. So looking at the monthly, we're at that area of rejection right there. This is where we're expecting 1960s is how far price can go. This is the current range. And if it breaks above, well, we're going all the way up to retest the trend lines at 2000s. So if you're trading, trade carefully, because you could see that push and then a drop. Now, will we see the entire drop down from this range here? I would expect this month to do that. So we have 2 more weeks to go. Next week we have the interest rate decision. So it's going to be a very, very impactful next couple of weeks. So we expected this week to be a little bit of a bullish move. We're seeing that kind of play out. So moving into the weekly, let's look at what the current situation is. So if you look at the weekly, we are still within that range. This is how far we can go potentially. That's how far price has gone up before it's rejected. However, if you look at that weekly, right there, rejected there and just built momentum and went all the way down. Now, the weekly has definitely taken a retest on its way down. So does the monthly need to go there? Not necessarily. Monthly doesn't necessarily have to go all the way up to do that retest. That's why our current expectation is, again, if you look at the trend line coming in from the top, we are expecting, so if you look at it from this perspective, we had broken through that weekly trend line. So can we go further up? Yes, why not, right? We still have that scope. But then we also have this one here. And this is the one where we are expecting price to take a test and then drop further down. Now, this is where I've been saying that we enter dangerous territory. This is a previous symmetrical triangle area on the daily. We consolidated towards the sideways on the weekly. Now, once we go back into that range and close above, we have a high chance that we could still break above and possibly take that retest up there and then drop down. So now it's a critical range, so you have to be very careful in taking trades over here. So let's mark up. So I'm not going to mark up too many lines. I'm just going to take this is our current expectation. The power of this doji right there, expecting a retracement or a rejection at the 1948, 1947 level, right? So what kind of a range do we have so far that price can possibly cover through the day? That's 148 pips and closer to 200 pips, 250 pips right there. So could we see the weekly turn bearish today? We'll find out, right? But this is the current story we're looking at, is the power of that doji right there, or is it going to be the power of that doji right there that's going to send price further down? If we break above and close above, we are going all the way up. So you need to know the fact that price can jump all the way up. However, high likelihood of price rejecting at the level right there, because I would suspect price to take better support in this range here. Okay, so with that, we have a clear perspective. Okay, fantastic. Now, jumping into the daily. Let us see what we have to work with. So we are rejecting at the monthly area of resistance. Price tried to tap above, rejected. Current one going back up, unable to break above yet. No bottom wick on the current daily, so we would expect it to take a dip before a push up, right? So let us adjust this trend line here. Change the color of this to red. And this is going to be another interesting position to look at. Is this trend line going to hold? Okay, we'll look at that. Now support, where can price find support for the day today? Looking at the daily, good area of support at 1928. Price taps in, continues its way up, right? So this could be the one. See if there's anything coming in from the bottom. That would make sense of it. Okay. Let's not keep this. Okay. Looking at the daily currently, this looks like a good area of support. The doji right there, giving it power to jump up further. See if there is a broken trend line that we can find. Let's adjust this one here. So this one does align though. There we go. So we have 1, 2, 3 touch points. This tap here is the retest and continuation further up. So daily closing above, taking support at that level right there. The next one we would expect it to tap down into 28. So now we have additional forms of confirmation, a good area of daily support. Let's mark that in, daily support. And the weekly trend line that is broken. Now let's go into 4 hours. So now if we look at it, 4 hour, also a good area of support right within that range right there. So if we are expecting price to dip further down, it is still possible. However, this is a good area of support and a point of intersection on the trend line, right? So since the daily candle doesn't have a a bottom wick, we can expect that drive first down and then a push up, right? So let's look at the 1 hour. Now let me quickly look at the DXY. DXY has opened with a gap. So you can definitely expect DXY to flip to go and fill the gap, which could give us that drop on gold. And we are in an interesting point on DXY. DXY has gone bullish within that range more than once. So look at that. Once, twice, thrice. So we can expect a bullish move once again. And if you look at it, starting to create an eventual push up. So we'll see what DXY does. Going back into gold. Currently, I would expect price to go up here at least. So we don't generally take aggressive entries, but I'm gonna test this. It's a 15, 16 pip stop. It could even go to 37, but it's a good area of resistance. Price couldn't go back up once it dropped from that area. So right now you can expect a drop down to here. That gives you a 67, 68 pip trade. And it aligns perfectly, right? So let's use this as the parameter. That would be my considered entry. Are we rejecting right there, right now? Should I have considered this? It hasn't walked back up there yet. I think we should still be able to go further up. If not, you can look for sells below the current candle. Price continues down. Now that's going to be a scalp, right? That's not a long-term trade. This is just a quick Asian trade because today we have news. We can expect price to make some moves, and then possibly London would give us a bit of a pause. And let me look at 4 hours once again. Well, ideally I would want it to go all the way up here to get a good sell entry. But since we see a lot of pressure building up within this range here, we can still expect price to take the dip. So we're gonna wait. I've not entered the trade yet. Okay. $30-minute, good area of rejection right there. 15-minute, same thing. Good area. Left hand side, it's a good area, so look at that. Price is exactly at that rejection point. And I'm in. I am in. So I got enough confirmation. It's perfect rejection at that point right there. Let's see if it works out. Now we are gonna set up swings in the meantime. Current expectation is all the way up here, right? So long position into this range here. So we already have the 1 hour. So the 1 hour has already tapped back in there. So ideally, like the daily could still take the tap here, but it could still reject right above. But this is still going to be the safest buy entry. Stops. Look at the 4-hour. And good area of rejection right there. So now if we don't come back down here to London, then there's a potential drop expected up until this range here. So looking at the 4-hour, that is right there. Actually, I'm going to stick to this here. And our 40 pip stop loss right there. Right below that. Oh, come on. This thing here, 45, 43 pip. Okay, 44 pip stop. Expectation all the way up here. And 1 hour. So I'm expecting drop to 1928.4. And look for a buy there. Okay, and then we'll look for a sell. Let's go back into 4 hours. This is where it becomes interesting now. Why here and why not all the way here, right? Looking at the daily, we do have a scope of jumping all the way up until this area here. But if you look at it, this is a good area of rejection. Price has gone bullish in this range previously and gone bearish in this range previously. So the red area that we marked based on the doji coming off of the weekly. And so this is going to be the first testing criteria for me, is to look at if that holds. So going into 4 hours, now this is based on technical so far. We're going to look at the news that's coming up and what is done previously. So previously we had an inflation rate drop. Interest rate did not go up this time around. So right now we may not expect the same pace of drop, right? They're expecting it to drop from 4 to 3.1. We may not see that. We might see a little bit of a higher amount of inflation, which would be driving a little bit of a fear. So inflation, you might see that big top wick and bottom wick as well. And then the next one could pretty much be a further drop. Now, if the interest rate, if this indicates that there could be an additional need for interest rate hike, then we may not necessarily see a massive drop. We might just end up seeing price going towards the opposite direction, right? So I have to be very careful in taking that kind of a situational trade. So with that, this trade could go get invalidated with news. News could just push through. Look at the range we have. So this is where we're saying it's going to be the daily bottom wick, and price goes up 180 pips. We are expecting news to give us around about 200 250 pip overall move. We look at, so look at that. We could pretty much break above and close there. So let's look at was the 12th, right? th, I believe. And I'm gonna go into 30 minutes. And this is the inflation data. And let's look at the news candle. News candle itself is 207, 210 pips. Overall days range is 300 pips. So let's go back into our chart here. And it's the same trend line that's coming up that we have rejected with the inflation data, right? So this is the inflation data right here. It's the same trend line, part of the formation process, price rejecting, and then the next one going up, and then again push down. So news confirmations on each of these trend lines, right? So we're going to adjust the trend lines a little bit on the 1 hour to make sure that they make sense on the 1 hour as well. There you go. Now let's go back into, so if you look at the daily, the 1 hour, price has the range of going up all the way to 1951, which becomes dangerous territory. We do have a rejection area on the 1 hour within that range right there. Let's look at 4 hour. If 4 hour can give us further indication of that being a safe spot. 40. So looking at the 4 hour, our trend line is, yeah, it's lined. So if we do this, consider this, it's still a big stop loss. And given we have news, it would be worth having a big stop loss. We look for more confirmations on higher time frame. Let us see. Further evidence. Took a buy on UJ. My stop loss is at 1950.4. Over here. Yeah, why not? So, see, this is the challenge. Looking at the daily, look at, we marked this area based on the 4 hour. Look at the daily. Reaches that doji right there, almost. This is where it becomes dangerous territory. And that's why this area is so risky, right? So what I would recommend is, what I'm going to do is I'm going to put 2 trades in here, and both with pending, because I want to catch a swing. If that swing works out, fantastic. If not, that's fine. I'm willing to take the loss. So if you're taking a trade today, you need to be, there is a 50-50% chance of your trade working out. Any bias you have, buys or sells, because today is a very important day in terms of news. Today's news is going to set a chain of news in motion. Interest rate decision. That interest rate decision is going to have an impact on some of the other upcoming news for the next few weeks. And so if you look at all of that, it's a really, really important day. On these days, you generally want to take as conservative as possible when you're taking a trade. Ideally, if you don't trade, that's fine, right? So please only take, so gold seems to be moving further up. I don't want to move my stop further high. Let's see how price reacts there. Well, we've broken up. That's fine. It'll do what it has to. If it takes the stop, that's fine. So let's finish the chart here first. There we go. And yeah, this is the best sell right now, I feel. Anything above that, yeah, you could still see price trying to make an effort to go all the way up and then pretty much reject within this range here, right about that spot right there, and pretty much come back down. 49. So it's very rare that price, now this is an interesting range, right? We've consolidated in this range for a long time. So there's a lot of areas of rejection. But what is the best area of rejection? If you look at it, it's all the way up here. Look at this, right? When we say it's here, we only have one area of rejection. Is that strong enough to hold? We have 2, 3. Look at this, all the way up here. That is my so look at this, going all the way up to 1955. So price has most often gone up all the way to 54, 55 range, and that is where it becomes risky. So it's a risky day. If you can't sit out. You don't need to take a trade every day. I'm gonna take the risk because I'm gonna try and catch the swing to the hedge, pretty much. And yeah, I'm gonna hold this here. So let's do this. Let's post this into Discord. Let's lock it in right here. Discord. Let's post this into gold. So we placed our stop loss right above that candle top right there. Broken above. If we close above, we have 23 minutes, lower chance of closing, but ideally, since we've broken above that range, we should be able to go a little bit further up, at least up until here before we dive down. So yeah, aggressive trade, always with the risk. Okay, now let's go back into 1 hour and let's look at the setup. Let's see if there's any other sets of confirmations we can see. Now look at this, 1 hour is giving you a better indication of price going all the way up, right? Rejection at around this area. There's more rejection within this range here, 1952. It's a 55 pip stop. We don't generally take it, but this feels safer for the trade. There is no indication of a good reversal within this range. Again, price can go a little bit above and then go back down. It can do that. To find the best area of rejection, 49 is looking fine. The lower the time frame you go, see 1950. So yeah. I'm gonna adjust this range a little bit and we'll take a trade based on this. Okay. We need to cash out from CPI. Yes, you can cash a lot of money from CPI, but you can also lose a lot of money from CPI. So please, please, please be very, very careful in taking any trades. If you don't have a big account, if you're trading with small accounts, look for confirmations, let the news kind of settle through, and then take the trade. Because news can pretty much, reverse the move after the news is where the sentiments are settling in, and you would pretty much see the drive down. So be very, very cautious in that. Okay. Yeah. So this is my current expectation on gold. Now, if I wanted to collect take profits, obviously the yellow lines make sense for me to have take profits on higher time frames. But we need to collect profits along the way, right? So this is going to be the first area. You can see that. Let's look at the 4 hours, 4 hour better area. So I'm going to collect some TP. That's not going to be a huge amount. But this is how I generally use mitigation of risk. So I can expect price to tap, go back down, take support, and then possibly push up if it's breaking through. So collecting some profits mitigates some amount of risk because this is going to be a higher number of lots that are getting collected here, not the entire piece. So if I'm taking 20 lots, probably going to close 4 or 5 lots within this range. It's not 50% close, so I'm going to close a decent amount there, depending on the lots that I'm taking. But mitigating some risk. So if I was to lose 40K here, I'm pretty much going to lose 20-30K. So I would rather collect some pips than none, right? So that's how I mitigate risk instead of using like hammering down my psychology and thinking that, okay, I'm going to manage risk, close this trade. And then if price reverses, then I'm going to blame myself. Why did I do it, right? That's why over here we're going up. If my stop loss it hits, I would rather take the stop loss than blame myself that, okay, why did I do this, or why did I take that entry, or what else, right? So okay, yeah, that's it. It's going to be the trade 1947.87. We took it down a little bit just to make sure that we are at the trend line right there. Okay, now see what is 30-minute doing before we look at some other charts. Are there any questions? Anything else somebody's looking for? There we go. What is happening to DXY? So DXY is continuing to drop. DXY is still not taking support. That's why, right there. So if you look at DXY has broken through all possible trend lines so far. So this here is dropping to find an area of support, which is right there. Find support, it will reverse. So on gold, we have to wait for that trade. Pretty much looking at gold, comparatively. Why not? We can go all the way up here before we. Now look at volume. Look at here. And look at there. Look at the volume difference. This is at 9. We are still not at 9. So this is at 8. This is at 8. It's like half the volume difference. So you see how the markets react, how the markets are moving when there's a specific high impact news. Like it looks like the Asian market is trying to find a good spot that they can push the price up, collect some profits, let the market make its move during London, and hopefully catch a good trade for buys from here. That's what I look at. That's what I see when I'm seeing this kind of a volume and I'm seeing this kind of a push, especially on a news day. Because if you look at previous days, look at the move that Asian has given us, barely anything. So this is encouraging and risky at the same time, given the type of news we have. Okay. So I think with gold, that is what we're going to look at, right? The buys, expecting rejection at the trend line, going into these buys here, and sells are on news, expecting this trend line to hold, which has been a trend line that's formed with a touch point given by CPI in the past. So we would hope that that holds again, right? Forecasting wise, I would expect, let's look at the numbers, right? Inflation, core inflation, previous was 0.4, forecast is 0.3, actual we might see as forecast. Ideally, it would either be as forecast or as previous, but it wouldn't be lower than forecast, at least not my expectation, because we've not hiked interest rates, so we're not putting more pressure on it to drive down. That generally means basically what they're trying to do is fine tune, right? So when they're not pushing interest rates up, what they're trying to do is when they're not pushing interest rates up, they're expecting inflation to give them a steady momentum. So they're trying to gauge the idea of or gauge the idea of how fast is inflation going to drop or go up if they don't increase interest rates. And then they're going to plan out their strategy for the next few months. It's not just going to be, okay, this month do we need to increase it? Next month do we need to increase it? They're trying to gauge better forecasting for the upcoming few months. And that is the purpose of the interest rate not going up last time and the expectation of the current numbers. So with inflation rate, core inflation, forecast is 5, previous is 5.3, and you can look at the expectation. Let me pull my Forex forecast so we can look at historical news so I can give you a better perspective. Here it is. So let me share that window. Hope you guys can see it now. So CPI, June 13th, we had 0.1 was actual, lower than forecast. Previous was 0.4. Look at the pace of it. It's from 0.1 to 0.4 and then 0.1 again. So expectation is it would generally be closer to as forecast, or expecting the inflation to go up from 0.1. So this is going to be interesting to see. If it is, instead of 0.3, if it's lower, I would expect it to be lower than 0.3. The previous expectation was 0.2. It was 0.1. They increased it to 0.3. And looking at the pace at which things have been moving, I won't expect a drop below 0.1. But 0.2 is going to be my expectation for this because of the lag, right? They've been complaining about the lag and they've not been able to get a better gauge of what market is doing. And so this is going to give them the required information that they're looking for. Year on year, if you look at it, 4.1%, 5.0%, 5.1%, 6.0%. That's a forecast. Look at this, lower than forecast, lower than forecast. So 0.1, 0.1, and then immediate drop to 4.0. That's the lag coming in. Now 4.1%, they got 4%. So they are closer to expectation. Now they're saying it's going to be 3.1%. I don't expect it to go down all the way to 3.1%. I would expect somewhere around 3.5, higher than forecast, to be the actual number. So not expecting a massive drop, because understand this thing. They mentioned that inflation, they want to bring it down to 2%, but they know for sure that it's not going to happen this year. They need this year and next year, so interest rates are going to go up for the next couple of years, which means the expectation of it going down from 4% to 3.1% without any additional interest rate changes doesn't make sense right now. So forecasting that, I would expect somewhere around 3.5%, 3.5%, maybe even a little bit higher, 3.7, 3.5%. That would kind of be my expectation on this specific news here. Core CPI has pretty much been 0.4% for the past few. They're expecting it to drop to 0.3%. Now this is possible because we know that demand has gone up, market supply is kind of getting settled in after the impact of COVID. Markets have, like, the supply chain has just started to ease in, meaning that we could pretty much see 0.3% possible. So we'll see. Let's see what comes up. But I would expect as forecast, higher than forecast, lower than forecast. So 0.2 it would be my expectation instead of 0.3. Or it just stays 0.1, right? So we have an idea of what to forecast of all of these news that are coming up. That means now when we look at gold, we have a good vision of what market can do. So market can definitely find that doji thing where price is going up and down. So you will see a lot of scalpers taking a buy and a sell at news. Please do not do that. Big account, small account, whatever it is, I've seen people blow their accounts. I've seen people lose all the profits they've made in weeks in that one trade. Do not do that. If you have a good bias and if you have a good analysis, go with the analysis. Technicals are always giving you some set of indication, right? Current technical indication is we are heading towards a correction and then price continues down. That is the current expectation. Technicals are giving us that kind of an evidence. We have a trend line coming in at the top that's been respected and part of the formation by CPI. So CPI can also break it, okay? So don't get cocky and think that, okay, CPI is not going to break it. CPI can still break it. We made a lot of money on CPI last time, so let's hope that we can make the same this time around, okay? So let me take off the window. There we go. So we have a good analysis on gold right now, so all we have to do is just wait for a market to do its thing.